Good morning, everyone. No, wait, it's afternoon. My name is Adam Durgis, and I'm one of the founding partners of a company called Raintree Financial. And I'm thrilled to have Leif Snethen with us today from the Avenue Living group of companies. He's here specifically to talk about their ag investment. Leif, thanks for joining us today. This is great.
My pleasure, Adam. Sorry about my hair and makeup people. They're working at home today, so sorry for what you get here.
Yeah, I've got nothing to apologize on my end. Anyway, this is great. In all sincerity, I hope everybody is doing well, and we're really grateful that you chose to invest an hour of your time with us today to learn about this investment. This would be among the most boring investments we've ever seen, which is a really good thing in this day and age. It's hard to be more boring than farmland, but it actually is a very fascinating industry in my mind, and one that I'm quite passionate about. So I'm really excited about this. Andrea, do we have the presentation ready to queue up there? And while she's doing that, just for everybody on the line today, all the people viewing this today, you will notice at the bottom of your page, there is a Q&A box there. I would encourage you to ask questions, but I would ask you to use the Q&A box and not the chat box. And that's simply because of the fact that it's a lot easier for me to stay organized with the questions in the Q&A box than chat. So you're doing me a big favor if you can use that. And Leif, as always, if it's a question that pops up that I feel needs to be addressed right at the time that they ask it, then I'll interrupt you and we can get it going right away. And if not, I'll save it for the end. So with that said, let's get cracking.
All right. Thanks very much, Adam. With that comment about being boring, you might be a great wingman in business, but in my social time, I think I'll find somebody else. Greetings, everyone. Thanks for taking the time to consider investing in the Avenue Living Agricultural Land Trust. My name is Leif Snethen. I am the co-founder and CEO of the trust. The Ag Trust is one of the Avenue Living group of companies that together manage over $2 billion in real estate assets. In the office here, we have an integrated team of analysts, accountants, and lawyers that facilitate the management of the trust. The Ag Trust was founded in late 2016, and with friends and family money, we bought our first farmland in April of 2017. We now have over 80 million in assets under management. The business of the Ag Trust. The Ag Trust uses investor capital to buy farmland. The land is leased to farmer tenants for cash rent. The trust borrows against the land it owns to then buy additional land, i.e., we use leverage to maximize investor exposure to farmland acres. This will be evident in a future slide when you see the amount of capital we've raised versus the value of our portfolio. I want to emphasize that we don't just sit back and wait passively for land to appreciate. We actively spend money to make farming efficiency improvements and to increase the farmable acres on our holdings. We also build grain storage for which our tenants pay additional rent. An example of that is this spring and summer, we're going to be building 180,000 bushels of grain storage for a tenant, and that's going to cost us about $500,000, but he's going to pay additional rent, giving us a return on that grain storage investment. Serendipity also plays a role. We have non-farm revenue that comes from a wind farm. We're selling gravel off of one of our properties now to an RM, and we have oil and gas surface leases, to name some of those. So the slide we've got up right now, it shows the numbers you see are sort of January 2021 numbers. Just to update that a little bit for everybody, as of tomorrow, we'll have over $80 million of assets under management. We'll have just over 47,000 acres under management, and we have raised now over 22 million. So that brings our target raise down from the 35 million stated on this slide to more like 28 million. Farmland is not a new idea by any means. A large portion of our high net worth families have had farmland in their portfolios for decades. However, there's just not been an abundance of ways to invest in the managed farmland space. I personally think you should invest in farmland if you believe in one or more of the following points. One, the world will have a use for the starches, proteins, and oil seeds grown on Western Canadian farmland for a long time to come. Two, the growing population of the globe will increasingly need these commodities. Three, the commodity prices will rise over time. Four, that inflation has already started to affect our food supply chain and is likely to have an increasing effect in the next while. And lastly, that farmland as a low maintenance form of real estate will rise in value as a result of the previously mentioned points. And again, remembering that everything I've said there is a personal opinion that needs to be investigated by each individual investor. All right, if we could move on to the next slide, please. And again, this is just a quick slide showing the Avenue Living platform to over $2 billion in assets. Next slide, please. And you know what? We're going to maximize our use of podcasts to talk about the Ag Trust, but I'll leave it to the portfolio managers out there to discuss the other offerings of Avenue. So we can have the next slide, please. And the next. And one more. So, sorry, back one. So I want to emphasize the right-hand portion of this slide. This is showing the arable portion of Saskatchewan, which is the southern third of Saskatchewan, and all the bubbles in various colors there show where the Avenue Living Agricultural Land Trust, where our assets are held. So as you can see, it is a diverse portfolio, a geographically diverse portfolio. But we are proactively, as I stated before, improving the value of our acres by doing things like draining small potholes so farmers don't have to drive around them when they're seeding and harvesting. Ancillary revenue that we're sometimes aware of when we buy the lands, but sometimes due to serendipity, we discover things like we did with the gravel pit we're getting revenue from now, and the wind farm application that we're now getting paid to be part of, that hopefully gets approved in the next year or two, which will increase our revenues from that. I want to emphasize again that we use leverage, and we use it quite aggressively. The fund sits at about 65% loan to value right now. And again, in a time of rising commodity prices and land prices, we think this is of tremendous value to our investors to maximize their exposure to this asset going forward. Before we're talking about this slide, I want to speak to the risks, potential risks of owning farmland. The trust has taken most of the rental risk out of our business model. Tenants pay their rent in 2 installments, one in the spring, half in the spring and half in the fall. And the second half payments are guaranteed by crop insurance. So should there be a summer where we don't get enough rain, or some areas of Saskatchewan don't get enough rain, that is all covered with crop insurance. It's a government subsidized form of insurance that all farmers use. And it is a type of insurance where if you make a claim, it's not as if your premiums are going up the following year. It's just one way of ensuring, the government ensuring our security of food supply in Canada. With respect to, I'm often asked with respect to what could potentially be a black swan event, and the only things I can come up with, which don't seem likely to me, but climate change to the extent that we aren't able to grow crops up in Western Canada anymore, a new source of food to feed the global population. You might think of insect protein or something like that, but again, something that if it does happen, is not going to happen overnight. And by overnight, I mean it's going to take decades to get people used to that concept. So I think our farmland investment is going to be secure and safe for some time to come. The slide that we had up there a moment ago was just showing the relative valuations of farmland across Canada, actually, with Saskatchewan being by far the cheapest farmland in Canada. These numbers are a bit dated, but relatively speaking, the ratios are quite similar. Values have continued to go up across the country, not equally, but the trend is up. Saskatchewan being the cheapest though, and that is because of their long time, they think, commitment to farmers to protect farmland values from rising by limiting or restricting farmland ownership. We can talk about that later if we have time. Next slide, please. So the terms of and structure of the trust, again, changing some of the numbers that are stated there. We're at sort of 42 or 48,000 acres now, greater than 80 million in AUM. The offering right now, we're looking for about $28 million. And this all stems from, you do the math, what we were, in order to operate in Saskatchewan, we were given a maximum, a limit on how much equity we could raise, and that was $50 million. So as we've raised now around 22 million, we've got 28 million left to raise in the Ag Trust. The trust formally matures in December of 2023. So we've got 3 farming seasons left. In the next 6 months, we plan to roll out how we plan to proceed, because we don't want to sell these farmland assets. We want to give our investors the ability to have liquidity at December 2023. But we also want to provide them a means of rolling that investment forward in a more open-ended vehicle, so they can come and go as they please, and perhaps start to reduce debt and refinance so that we're able to provide some sort of distribution at that time. Right now, there is no distribution in the Ag Trust, as our relatively low, call it 4% rate of return, is chewed up by debt service, which again is there for the benefit of the investor to maximize his exposure to the capital appreciation of farmland acres. The returns, the investor, there's a 8% preferred return in this investment. So what that means is we're not guaranteeing an 8% return, but what we're saying is if before management gets any return on their investment at 2023, investors will have received an 8% annual rate of return. Everything over and above 8% is shared with the GP. Next slide. COVID-19, we're getting tired of talking about it, but I think the greatest impact that COVID has had on the farmland space, on the Ag Trust, is basically just an increased general awareness of where food comes from, and it's resulted in an ever increasing flow of capital into the ag space from investors. The points that we're making here on this slide is commodities, they're traded in US dollars, so a low Canadian dollar is actually a benefit to farmers. Fuel and fertilizer prices last year were very low, and that was a real benefit on the input cost side to our farmers. Fuel is starting to rise, of course, with rising WTI. Fertilizer prices are rising along with hydrocarbon prices, but they're still relatively low to where they were several years ago. And you still see government support of the agriculture industry, exacerbated again by COVID responses. Next slide, please. This again just shows Western Canadian farmland, Alberta, Manitoba, and Saskatchewan, just constantly over time going up in value. The difference it's not on this slide, but while Alberta farmland is the highest in value, it is surprising how rents do not follow the increase in value. So if I were to buy farmland in Alberta, I could expect to get less than a 2% rate of return from a rental point of view. Saskatchewan, it wouldn't be much more than 2. Manitoba, not much more than 2. Saskatchewan, though, I'm able to attain my 4% rate of return. So hence, that's why using leverage, so to be able to service debt, that's why all our assets so far are in Saskatchewan. I haven't been able to find a place other than Saskatchewan that I can get the appropriate returns. Next slide, there we go. Again, just showing how the arable land per person is dropping with time, and with the population growing, our food supply needs to rise to meet those demands. Next slide. It just basically shows that the farmland, like most businesses in other sectors, consolidates over time, and that is certainly what's happening with farmland, the average size of a farm is going up and going up quite dramatically. The number of farmers, individual farmers, is dropping. And I think the next bit you can go over with your advisors, and I think it's maybe time to open it up to questions.
That's great. Thanks, Leif. So a couple things. So again, for everybody on the line, please write your questions in the Q&A box, and we'll do our best to get them all addressed. First question comes in, and I'm gonna paraphrase it just a little bit, but they're asking about. You made a comment earlier, Leif, about some of the potholes and some of the improvements to the land and the impact that can have on waterfowl. Can you just talk about how you work with groups like Ducks Unlimited to make sure that when you are making adjustments and improvements to the land, that you're not doing anything disruptive, you're not doing more harm than good?
Right. Actually, on one of our farmland purchases, the tenant is Ducks Unlimited. So again, like that organization, like what they do, obviously with the amount of waterfowl, birds around, it seems like it goes up every year. So there's certainly no shortage of them, as anyone in central Saskatchewan can attest to. But when I talk about drainage land, I'm talking about land that little potholes that if you get a heavy rain, water pools there. And then over the next few weeks, it'll evaporate and dry out. But in the meantime, a farmer hasn't been able to seed through them or is getting stuck at harvest time, and they are of no benefit to waterfowl. Those are the kind of things I'm talking about draining, and they don't usually take much in the form of just a gentle ditch grade to get them to flow off to the actual wetlands, nearby wetlands, which are of benefit to the waterfowl. So that's what I'm talking about. We're not talking about major drainage projects like that. And by the way, in Saskatchewan, you can't just drain significant bodies of water off your land so that then it becomes a problem for your neighbor's land. Those kind of things have to be coordinated. You're not even allowed to do that kind of stuff.
Right. Yeah. So it's a non-issue. It's a
non-issue.
Anybody who's lived in Canada for any length of time knows you can't just go. There's a lot of red tape, a lot of things you have to go through. And I know that you're lovers of the land and the province that we're working in. And the last thing anybody wants to do is cause any disruption to the land. It's something you're all very proud of, I know.
I will add that one of the ways we add acres is because of the farmland consolidation. We often in our purchases will come along with abandoned yard sites and things like that. And we add acres by cleaning up those old yard sites, pushing down the old windbreaks and carriganas and things like that, and reclaim that for farmland, which again increases efficiencies and adds cultivated acres to the portfolio.
Right. And on that topic of cultivated acres, is any of the land in the portfolio for grazing or livestock?
It is not. We have not been able to. Basically, the cowboy can't afford to pay us the rent we need to make our model work. So we have avoided buying any sort of pasture land.
Yeah, got it. Okay. Question about the hurdle rate. So it's an 8% simple rate followed by a 50% performance fees. So what you mean by that is after 8% simple is given to the investors on an annualized basis, everything over and above that is split 50% for management, 50% for investors, correct?
Correct. So for instance, if you got a 12% rate of return, and again, this is looking backwards at the end of the fund. This isn't on an annual basis. Yeah. But if it was a overall 12% annual rate of return, investors would get 10% and management would get 2%.
Okay, perfect. And actually on that topic, because I know there's a very significant co-investment that management has made and family of management. Can you just talk about that? Talk about what came in terms of co-investment from the Avenue Living management team?
Yeah, so about just shy, we'll call it 10 million of friends and family money came in basically in 2017. By the end of 2017, we had about 10 million of friends and family money. I can speak to my family itself has over $1 million into the trust. And collectively, I think the management and directors of the trust have over $2 million invested.
So it's a significant amount. So in reality, there's actually a couple ways that you guys make money. It's on the performance fee, but it's also on the performance of the dollars that you've personally invested, which is a sizable amount. And for those on the line, like that is an amount of money that matters to you, correct, Leif? Like this is an amount of money that you care about.
This is an amount of money that I very much care about. Yes, this is by far the largest investment for me personally.
Right. Okay. And it's not like goodwill or sweat equity. This is dollars put in the deal, because a lot of groups will roll sweat equity or things like that into their number. And you guys, this is actually checks written.
This was money that was left over from my oil and gas life after it got decimated. Yeah.
Question on the structure, Leif, because there's a number of different ag funds out there. I mean, we've seen structures that were pretty inefficient from some other groups. And by the way, like this isn't the only farmland fund we've seen out here. It's just the one that we like the best and we like the team the best. Your structure is very efficient. And what I mean by that is we've seen other farmland deals where they'll raise the money and nothing will happen while they're raising the money. Pardon the pun, but the money just will collect dust. Does nothing until they stop raising money. And then after that, then they'll start to buy land. And in some cases, like there's been some groups where the first dollar in, there's an 18-month gap between the time that first dollar in actually was placed into farmland. This is very different. You as an investor, you are buying into something that is already into existence, and you close on capital every month, if I'm not mistaken, right? Every month you close on capital. And so when that happens, when there's a closing, as soon as that closing happens, your 8% begins at that time, correct?
That is correct. And that is the beauty of the leveraged model. So we're always heavily borrowed because we're wanting to maximize exposure. So when capital comes in, it is basically just reducing temporarily some of our debt, but then we run out and maximize it again. So the capital is put to use immediately.
And let's talk a little bit about that debt, Leif, because of course, mishandled debt can be a detriment to this or any investment. Debt is a risk and also can make things better if you use it properly. What interest rate are you paying on that debt? And maybe just talk about your ability to service that debt through crop rentals and how that's been going.
Well, there has been actually a very positive change since December of last year. We were using some mezz debt over and above. Let me back up. All along in the life of the fund, we've been using mortgage debt, which was typically, we were given about 55% loan to value on our assets. Operating farmers, of course, they could get much higher levels of debt than us as a corporation and non-operator were able to achieve in the first few years. There's no logical sense to that, but that's the banks would only give us about 55% loan to value. But over time, we have sort of educated our lenders, one in particular, such that in December of last year, they gave us a $25 million line of credit that allowed us to take our portfolio, or at least their mortgage portion of our portfolio, up to 75% loan to value. And with that additional line of credit, we actually paid off some of our more expensive mezz debt, such that now, and this wouldn't be in any of our financials because it's so new, but now our blended interest rate is somewhere around 4%. You'll see it much higher in the annual numbers. I think it's 5.6 or something in the year-end financials coming out soon. But our debt service costs are dramatically lower than they were as of January of this year, which again will just go right to the bottom line and show up in our returns portfolio.
Can you talk, Leif, so on that debt, there's obviously some debt servicing that comes with that. And your primary source of annual revenue all comes from the crop rentals, correct?
Correct, with a little bit of that ancillary stuff, but it's quite modest. It's mostly from farmer tenant rent, yes.
Right, okay. And the rent is enough to cover the debt servicing, I'm assuming?
It is.
Okay. Is there anywhere else that rental income goes? Are there ongoing management fees that you guys are taking? Is there anything like that on an annual basis that's a cost of this fund?
Well, we charge a 1% annual fee.
Right.
To cover some of those costs. but most of the rent goes to debt service costs.
Yeah. Okay, great. Leif, just changing tune a little bit here.
Adam, I'd like to make one comment about the sustainability of this asset.
Yeah, please.
So to me, farmland is the best real estate investment that I can think of with respect to the tenant being aligned with the farmland owner.
Yeah.
It doesn't have, you're not dealing with building, some sort of building that requires maintenance, roof repairs, constant upgrades, things like that. You're dealing with farmland that is treated by the tenant like it's their own, that they would from a sort of a moral point of view, but also they're just motivated financially to do exactly that. For instance, if they don't put enough fertilizer, if a farmer doesn't put enough fertilizer on the land, he doesn't get the yields that he would normally get. If he uses too much herbicide to control weeds, well, he's throwing away money because that's a very expensive product to use. If he doesn't use enough and weeds get out of hand, it'll damage his productivity, his yield. Everything he does relates to sustaining the productivity of the asset that you as an investor would hold in this trust. I just wanted to make that point.
That's a great point. And actually on that topic, sorry, I lost my train of thought. On that topic of the farmer being your renter, it is very different, right? Like if you own an apartment building, your tenant's ability to collect rent has nothing, or your ability to collect rent from your tenant has nothing to do with the building itself, because the building isn't their livelihood. But in this case, it's actually really interesting because your tenant relies on your land for their livelihood, which is actually really quite different from most other real estate arrangements. It's funny, Leif, I've actually never thought of it the way you just articulated it there. And I've only been selling farmland investments for the last 11 years. So that's really interesting. So on that topic, do you work closely with the farmers to make sure that they know what they're doing? Or do you, what kind of due diligence and homework do you do on your farmers to make sure that they're capable of looking after your land properly and looking after their own business?
If I approached my tenants with that attitude, I'd get shot at or something worse. I think that would be viewed as incredibly arrogant if I assumed I could come in and tell them how to run their business. When we put a piece of land under contract, we'll have a 45-day due diligence period. And in that time, one of the main things is to find an appropriate tenant for that land. And that's where we do our due diligence on them. It is very easy to see who is farming well and who is not when you drive into their yards, just based on what kind of equipment is sitting there, how many grain bins are in his yard, just the general appearance of everything and how well he looks after his own place. Because it has been interesting. I have been asked questions of, why do farmers choose? I mean, there's a perception out there that farmers either rent land or they own land. But the actual fact is the bigger farms that are being successful out there, they own a good portion of their land and they rent a good portion of their land. And I would say the split is, I'm going to guess that they own 2/3 and they rent 1/3. And basically there's numerous reasons to rent versus own. It varies from operator, but the rental land is a important and valued part of their operation.
Yeah, for sure. Yeah, it is an interesting element of what you're doing here for sure. Another question has come in here. Could you please confirm the maximum allocation of land in Saskatchewan for Avenue? There was an indication of 50 million said earlier. Is that based on like a Sask Wheat Board restriction? Will there be more allocation in the future? Was that just the cap that you put on this fund? How did you arrive at that $50 million number?
No, we had to, in order to operate as basically our structure is like a mutual fund trust. In order to take registered funds, we had to have a structure that the Farmland Security Board would typically not allow to own farmland.
Right.
So we had to apply to Saskatchewan Farmland Security for an exemption from their rules. They granted us one, but it wasn't an unrestricted grant. They put a caveat of we could never raise more than $50 million worth of equity. And we are only allowed to have a maximum of 1,000 unit holders. So we're at about 22 million in equity raised. So we've still got quite a bit of running room left. And we are at about 400 and 90 unit holders. So again, we've got a lot of growing still to do here.
Yeah. Yeah. And it's interesting that you've got the same date of conclusion for everybody, right? And just for everybody's reference, December 31st, 2023, that's when the liquidity event takes place. You touched on this earlier, but maybe we can just push in on this a little more, because it's your intention, if I'm not mistaken, Leif, and the intention of the Avenue team, you want to hold these assets for many years past December 31st, 2023. So how exactly does an investor get out, and how can they know that they're getting out at fair price? How can they be certain of that?
Well, one, everyone that wants to get out at the end of 2023 will be able to get out. We'll facilitate that. There will be an option that we're working on right now, and the details of which will come out in the next 6 months. There will be an option to roll into your investment into either a new share class or a new entity, so that you can keep the exposure. But if investors want liquidity, they will be given liquidity either through new investment that's come in. We'll just trade them out, or we'll be doing potentially some refinancing to pay people out that want out, or worst case scenario, and to us it is by far a worst case scenario, we will liquidate assets to pay people out.
Yeah. Sure. On the topic of collecting rent from your tenants, have you had any situations where, because I know they pay some upfront and then you're covered with crop insurance on the back end, but how does that cover you in a circumstance where it's just negligence? Like, what if a farmer just does a really poor job and can't pay you the rest of your rent? A, have you ever experienced that? But B, what would happen if that happened?
One, we have never experienced that. We have collected 100% of our rent in the 4 years we've been operating. That being said, we have worked with, I'm thinking of one case that I can think of where we didn't get our second rent payment until it was actually January. It was due in November. We didn't get it till January. And this was an organic tenant of ours. And organic farmers are most susceptible to lack of rainfall.
Right.
They are the guys that are actually cultivating the land to control weeds before seeding. So they're turning the soil over, and that evaporates any residual moisture. So they're the most exposed. And he did have a tough year from a rainfall point of view. So he did have to rely on crop insurance to pay his second payment, which he did. There was just there seemed to be an administrative delay in crop insurance, getting that claim processed, but he paid his rent and paid the following spring's rent as a result. And then the last 2 years, he has knocked it out of the park, because when you do get the right rainfall and you're farming organically, you're getting up to 10 times the commodity price.
Wow.
So it's crazy when they win big time. So,
wow, it's a bit of a double-edged sword, right? Like, you're not taking the crop risk per se, but obviously the better your farmers do, it does help you. What does a bumper crop year do to the price of land? Does it have an impact on the price of land, or is that what drives the price of land?
Well, that's exactly right. We just don't benefit directly, but it definitely helps bump the price of land when farmers have extra cash in their hands.
And I know, and I'm assuming that everybody on the line knows at least one farmer, right? And it's quite a life, right? Like, I can't imagine doing a job where, actually a lot of people through COVID can kind of relate to this now after having the rug yanked out from underneath them. But with farmland, you can do everything right. You can do everything the way you're supposed to, and then through no fault of your own, with a weather event, can have a whole year's worth of income be taken away from you. It's quite a thing. And so what I really like about this concept is you still get the benefit of owning the land, which is really the only part of a farm that has that true value, right? Like, everything else in a farm is a variable. I mean, of course, there's equipment and things like that, but the part that you can be the most certain of in terms of having value is the land itself. So it's just a really interesting concept that investors can get access to the underlying asset, still get the benefit when there's a bumper crop year, and that's obviously going to have an impact on the land. But because of the insurance and the way that you collect rent, if it's a down year, you might not make as much as you like, but so far what we've seen is investors are still protected in terms of their capital if there's some down years in farming. Is that an accurate way to say that, Leif?
Well, it certainly is. And because of the nature of most first world countries, governments are very, very aware of and very desirous of security of food supply. And
Sure.
you'll notice when really serious disasters happen, the government's always there to help out because they just don't want our farmers to go belly up. It just wouldn't be a smart thing for a country to allow.
Really? Yeah. We've got 11 minutes left here, and there's not a whole lot left in the way of questions. Any other points, Leif, that you think are important for people to dig into?
Well, I mean, all I can think of to say in closing is that I really enjoy what I do. It feels really good to be involved in this space. I really enjoy interacting with my tenants and holding a piece of the rock the way we do through this investment. I don't know, when I go to the grocery store and my bill is more expensive every month, it makes me feel good. That means my tenants are making out, and that'll likely mean that my land value is going up. So
Yeah.
it's all good. It just feels good. It's an environmentally friendly space. Just it ticks all the boxes as far as doing the right thing is concerned with my money. So
Yeah, it's funny you say that, Leif. That's exactly how I feel about farmland. Everybody that owns real estate of any kind, there's a point of pride that comes with that. It's like, oh, look what I own. And farmland is one of those assets that is very difficult to own on your own, right? Like, I can't go buy 10 acres of land and have that as a viable investment. Like, unless it's like I'm trying to build an acreage or something on it. Farming is a scale. It's a game of scale. It's not for the little guy anymore. It's a big world. And so to give people access to an investment like this in this format where they get to essentially be a part of a very large conglomerate, not just with a tremendous number of acres, but with geographic diversification through the province of Saskatchewan, that helps you with weather risk, with crop risk, with things like that. I mean, the more diversified you are in terms of where you are in the province, that's also a big help. So I would echo what you just said. What's that?
I might interject. People often can't mentally understand, again, how big an acre is, how big a section is.
Yep.
So one little thought experiment that I've used is if you imagine that you were driving a vehicle that was 1 mile wide, you could drive over 70 miles and still be on the Avenue Living Agricultural Land Trust land right now. And
Wow.
that's only going to grow. I mean, it's big, right? It's hard to imagine.
Yeah. And to be able to get into that, it's one thing if, let's say we were the first money in on this deal and we were 4 years ago and this is just an idea and you would have said at this time, hey, this is what we're going to own. It would have been maybe a little bit difficult to believe that. But the fact that people can buy into a portfolio of that size today that's existing, it's pretty great. So, and as I said, anytime you get to be in the great province of Saskatchewan, that's a win. As I said, all the best things come from there. So that's a running joke between Leif and I. I'm a Saskatchewan boy, obviously.
I mean, the way I see it, there's one extreme out there. You can invest in Tesla or Bitcoin. The other end of the spectrum is farmland.
Yeah, there's a lot to like about farmland for sure, and a lot to like about your team. I mean, I hope that anybody watching this, I know we sort of glossed over a little bit about just the size of the Avenue group of companies, but this is it's a very impressive group, and the more people learn about the overall group of companies, I think the more they like them generally. So thanks everybody for tuning in. This was a lot of fun for me. I joke about this being boring, but I could talk about farmland all day. I absolutely love it. Thanks everybody for tuning in. I hope everybody is safe and happy, and we'll see everybody soon. Thanks everyone. Enjoy the rest of your day. Take care.